Hello, everyone. Good morning and welcome to this episode of Follow the Money, brought to you by Nairametrics. My name is Idika Aja. We do this every week on this channel, 93.7 Classic FM, between 8 and 8:30 a.m. Here we discuss how to make money, focus on the stock market, direct you on how to build your portfolio, what you should know concerning the stock market, which stock is moving up and which stock is going down. And it is very important and very good to highlight some of them. Now, we go into it proper. Last week, the stock market, Nigerian stock market, continued its bullish run. It ended the week bullish, closing at 42.81%, which is very, very impressive. It means that the broad market, as measured by the all-share index, has even surpassed last year's performance, full year's performance. So wonderfully, it's doing very well. Then for Friday, the last closing date of last week, it had a change. It moved up by 54%. Week to week, we're about 2.37%. Then importantly, month to month, it moved up by 3%. The same thing with quarter to quarter. So you can see that the NGX this year is really doing very well. But normally, in everything, there must be gainers and there must be losers. So we're going to look at, for Friday, that is the closing day for last week, which is October 10th, 2025. We are going to look at the 5 top gainers and the 5 top losers. Leading the charts on the side of the top gainers, we have Dangote Cement. Dangote Cement operates in the industrial sector. It has over 60% of the market share of that sector. And it moved up by 6.48%, followed by NEM Insurance, operates in the insurance sector. Because of the insurance sector has been doing very well this year, probably because of the recapitalization news. And maybe people feel that, okay, fine, it's good to bet on it. So it increased by 5.23%. Then FTN Cocoa from the agricultural sector is where you have the big boys like Okumo Oil and Presco. I think FTN Cocoa is the second best performing stock in that sector, that subsector, behind Analyst. So it continued its bullish run, gaining 3.57% to close at 580 naira. Then you have a Computer Warehouse Group, which equally moved further by 5.46, and Deep Capital that grew by 4.48. That is on the top gainer side. We now look at the losers. It doesn't mean that when you hear loser, it doesn't mean that that's the end for them. You have to understand that the stock market fluctuates, and that's one of the characteristics of stock market. Some stock will do well this week, others will not do well this week, but by next week, you see an improvement. Then on the loser side, we have Union Homes Real Estate Investment Trust Fund. They operate in the real estate. I mean, what it means that real estate investment trust, if as an investor, you don't have money to even buy into property, at least you can invest your shares in Union Homes Real Estate Investment Trust. I think there are about 5 of them listed, where you have UPDC and you have Sky Shelter, all of them operating in that subsector. It dropped by 9.98%. Following, you have Mayer in the paint industry, we dropped by 9.85%. Sterling Bank, well, it is expected because Sterling Bank just closed their PO, and I think it was issued at 7 naira per share, and their share now dropped by 9.58 to close at 7.55, 7 naira 55 kobo, which is still okay. Then you have Cornerstone, we dropped by 6 naira 90 by 6.90% to close at 6 naira 21 kobo. Then eTransact, which is the last stock on that list, declined by 6.25% to close at a share price of 15 naira. That's okay for how the market performed last week. Remember, due to the increase, the market cap increased to 93.21 trillion, which is very, very good. And analysts expect that maybe by the end of the year, we may likely see it move up to 100 trillion mark. That is very, very impressive, and that is very, very good. Now, the second thing on our list today is the market outlook. Now, we have looked at how the market performed last week. We're equally going to look at what is driving that performance. And that will now take us to the equity participation. That means you look at both the domestic participation and the foreign participation. What is influencing the rally? What is driving it? Now, if you look at it very well, yes, the retail investors are doing very well. The retail investors are doing very well. And right now, they continue to deepen their presence in the Nigerian Stock Exchange. As at August 2025, according to reports released by NGX, the domestic participation reached about 5.46 trillion. 5.46 trillion. That is very, very massive. But we are going to look at how they perform. Normally, you have the institutional investors, you have the retail investors. All along, over the years, the institutional investors have been overshadowing the retail investors. But it appears that right now, especially this year, the retail investors are saying, no, we are still around, and they are actually doing a lot. They are actually doing a lot, participating and increasing their holds on the market. Between January and August 2025, the total transaction from that retail end stood at 2.33 trillion. 2.33 trillion. That is very, very massive. And that represents about 43% of the total domestic transactions done within this period. That means 8 months. And the highest share in nearly 2 decades. And then compare it to the institutional investor that did 3.13 trillion. If you add 2 of them, that will now give you the total participation from that domestic side to 5.46, which is very, very impressive. Now, also, if you equally look at the foreign inflow, the foreign participation, which is divided, we'll have the foreign inflow, then we'll have the foreign outflow. Equally to that one has done very well. We have a foreign turnover of about 1.45 billion. I think compared to what they did in the whole of 2024, where you have, I think it should be about 865, if I'm correct, billion. Now this year, foreign participation has increased to 1.45 billion. Though, if you look at the inflow and the outflow, you have still a small gap where you have inflow is about 705 billion and the outflow is about 748 billion. But the key thing there is that the gap is narrowing, is coming closer, unlike what we used to have. And that is very, 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 very good. And I do hope and analysts believe that, yes, what is actually driving this growth, especially the retail end, is the one of them is the fintech, which has made it very easy for people to participate, even from the comfort of your home, where you can at least buy stock the way you like. You don't even need a stockbroker. But once you have a trading account, you can easily on your own buy, and that is helping the retail end to grow. Now, another important thing that happened within the week that we are going to look at too, like we said, the essence is to bring out everything that you need to grow your investments, the information that you need, anything you need that can help you grow your investment, we'll look at it. Now, of recent, the what we call the FTSE, that is the Financial Times Stock Exchange, of course, added Nigeria back to their watch list, which is equally very, very important because it will actually add to the credibility, add to the visibility of the Nigerian Stock Exchange. You know, FTSE is just an offshoot of London Stock Exchange, and adding back Nigeria to the watch list is very, very important. It's very, very good globally and even locally to Nigeria. So that is very, very key, and it's very, very important. It still boosts Nigeria's credibility, which is very, very important and very, very key. And these analysts believe that the return, eventually, the full return of Nigeria will equally boost the Nigerian position and unlock hundreds of millions that can even come in, that can flow into the stock market. That is very, very important. That is very, very important. And at that, we equally have to do one or two things, which is on a cautionary note. At least we have to ensure that certain things are put in place. We have to sustain the Naira. Though Naira is a bit stable, we have to continue working towards that to ensure that, yes, it's stable. That will be a big encouragement and continue to push up inflow. Well, before we go to the next session, let's take a break. We'll come back. Please don't go away. Just hold on for us. We'll come back. Thank you. Yeah, welcome back to Follow the Money. For those of you who are just joining, we're having this thing on 93.7 Classic FM, and we do it every Monday by 8 to 8:30 a.m. Welcome back. Now we'll go to the next session, which is trying to look at the specifics, how some stocks have performed, compare them, especially when we do comparable analysis, we'll bring it to you. Now, first thing we're going to look at now is we'll take Honey Flour and Northern Nigeria Flour Mills. These are companies operating in the food production subsector, and they are milling companies. Now, they have released their half-year results, and yeah, quite impressive, but we're going to look at it, compare two of them, look at it, bring out something for you to consider, especially investors, to know which stock is actually good for me to invest. Actually, the two of them they have done very well in terms of share price appreciation. I think Honeywell is leading the consumer goods sector, I think, with about 269% share price gain. And Northern Flour Mill is not doing bad. I think it has gained over 100%. So that's impressive growth. But between two of them, who offers a better value? Now, share price of Honeywell closed at 23 naira per share, while Northern Nigeria Flour Mill closed at 93.65, 93 naira 65 kobo. That means as at last week, Friday. Well, if you look at it that way, you will see that, okay, fine. You will see that Honeywell having a lesser price, or Northern Nigeria having a higher price in absolute terms is doing better than Honeywell. But that's not always the case. But let us now look at, briefly look at the valuation to actually find out who is doing better. If you look at let's use a price earning ratio. Price earning ratio tells you the relationship between the earnings of a company and the share price. So it tells you how much you are actually paying per naira of earning. Now, the price earning ratio of Honeywell stood at 10 naira, 10.7x. That means it's telling you for every 1 naira earning that you are paying 10 naira 70 kobo. That is what it means. Alternatively, it tells you that it take you about 10.7 years to recover any investment you place in Honeywell. Now, let us look at Northern Nigeria Flour Mills, which trade at 9.86x. It's equally telling you that for every 1 naira every 1 naira earning of Northern Nigeria Mills, you are paying 9 naira 86 kobo. Alternatively, it will take you 9.86 years to recover your investment. This is normal traditional valuation metrics that analysts use to find out whether this one is overvalued or whether this one is undervalued. Now, if apart from that, if you look at their earning growth, what happened? This one is Honeywell grew its earning by 28%, which is okay, which is still good. But Northern Nigeria did better, growing earnings by 35%, which is very, very good. Now, if you look at it from these ratios, yes, it appears that Northern Nigeria Flour Mill is cheaper if you are looking at it from the angle of price to earning ratio. But you have to be very, very careful too. It's not only price to earning ratio that you use to know whether a stock is overvalued or is cheap or undervalued. The other metrics you can use, you can combine it. You have the price to book ratio, you have the price to sales ratio. You can even do, when you do valuation, you have the discounted cash flow valuation, you have the dividend discount model, which you can use to determine whether a stock is actually undervalued or valued. But the most important thing is that whichever one you want to invest, you always find out whether it is overvalued or whether it is undervalued. What is the market telling you about the stock? You can get that through the price to earning ratio, through the price to sales, through the price to book ratio, and price to sales ratio. And those are the traditional valuation multiples you can use to actually determine. But with this thing we have now, if you look at it from that to price to earning ratio, Northern Flour Mill appears to be cheaper than Honeywell. But equally look at whether they pay dividend or not. That is okay for this one. Let's go to another company. We'll pick another company which is very, very important. I think they released their results on September 30th, 2025, which is their Q1 results. And that company is no other than PZ. PZ has been is operating in the consumer goods sector, and I think last year they didn't do quite well, but this year they have come back. They said, we are here. So, like what you said, FTM brings to you what is happening in the market, which stock is doing very well. Look at their valuation, look at their earning growth, look at their revenue, and present it for you to look at it, and that will now help you to build your portfolio. Now, PZ released its Q1 2025-2026 results, and that was on October 30th, with a profit rising to 21 billion. Profit rising to 21 billion from loss of 5.22 billion in the same period last year. That is quite impressive. Very, very impressive. And, the market reacted immediately to that. It was released on September 30th. And so far, I think immediately that the share price rose by 22%. But I think it has dropped down at close of trading last week. It's recorded 13% month-to-month growth. That means in September it has gained 13%, which is above the normal 10%, which is good, which is impressive. So investors, before you equally take a position, always find out whether PZ is overvalued or undervalued. You can get your financial advisor to assist you. Of course, I know if you look at their financials, the results, the impressive result was driven, I think, where you have other income of over 12 billion, driven by the sale or disposable of assets, which they got about 11 billion. So that really helped the bottom line. Well, that is all for PZ. Now, at times you have analyst recommendation on stock to buy, whether to buy this one, and they place a buy recommendation, have a sell recommendation, or have a hold recommendation, or have accumulate. So when you go to NGX, normally see the figures by NGS analyst stock recommendation. So we are going to look at some of them, the recommendations they made, and we are going to look at what are they saying about Access Corporation, or rather MTN, whether it is to buy or to hold or to sell. But overall, they made a general buy recommendation on some of these stocks. Access Holdings, or rather MTN, Seplat Energy, First Bank. Well, if you look at Seplat, I think that last week jumped up. I think from 5,000, I think 379 naira 30 kobo to close to 5,700 thereabout. But it increased rapidly. So analysts said, okay, it is a buy for that stock. Then MTN too, they made a recommendation of a buy for MTN. Yes, MTN has been doing very well. Last year, they started recovering in Q4 after big losses in 2023 due to foreign exchange losses and high interest rate. Now, coming into 2025, at least starting from Q4 2024, they started recovering and posted strong profits in half year 2025. So that could be the reason why analysts are playing a buy recommendation on MTN, which is good, and the stock has been doing very well. And remember, it is among the stock worth over 1 trillion naira on the exchange. So that is it. Then if you look at First Holdco, as a recommendation there, by recommendation on First Holdco, that's okay, fine, this stock is strong. We recommend that you should buy it. Okay, we move to another section, and that is the big boys. That is the big boys. We call them stock worth over 1 trillion naira. This category of stocks, I think we have about 22 of them, but we're going to look at only 10, the top 10, how they performed, how far they have done, or what they did in Q3. Who is topping? And if you look at them, and that will give you an idea of what to do. And these 22 stocks have market cap of about 79 trillion. You can see they are taking, they have a greater percentage of the total market cap to show you how important that this group of stocks, the group is. Now, leading the pack, we have Boasment within in Q3 gained 67.7%. WAPCO, the same sector, grew by 43.46%. Boa Foods, which is outside that industrial sector, Boa Food operates in the consumer goods sector and the food production subsector, grew by 37%. Boa Food has been consistent in delivering results. In fact, in 2024, it's one of the companies that recorded profits, even when others declared losses. So Boa Food has been consistent, and the share price has moved up by 37% in Q3. Then Stanbic too did very well. Nestle did very well. Nigerian Breweries, another consumer goods sector. Then, if you look at the banking sector, we have UBA, Zenith, Fesco. All of them saw noticeable increase in their share prices in Q3. Then, of course, the last but not the least, that the last there in terms of the share prices, Arada, that gains 19.53%. So that is it, and I thank you for listening, and we'll have another episode again next Monday by 8:30, by 8 to 8:30, and it's always good to tune in so that where you have insights of what is happening in the capital market, I will help you to grow your portfolio, sustain your investment, make sure that you have the correct information. I am still Mr. Idika Aja, and thank you for listening.